we feel that this is a unique opportunity for North American investors to invest internationally. And I think there are mainly two reasons for that. Reason number one is certainly that from a currency perspective, given the fact that the US dollar is still trading at reasonably high levels, yet starting to fall, it's a great opportunity. The US dollar between 2011 and 2016 was recovering by almost 30 to 40% against most other major currencies. And so from the all-time low in 2011, we've seen a significant recovery, but yet we're actually, again, I think once again at the turning point where we're most likely in the early phase of a longer-term correction in the dollar. So from the perspective of a North American investor, I think you want to start diversifying while the value of your currency is still at reasonably high levels. And then the second reason for it is also quite simply when you look at market valuations around the globe these days. We have a situation that we haven't had in a long time, and that is that US markets are trading at such a significant premium over other international markets that we feel that is certainly not sustainable in the long run. And just to give you an example, I mean, we have a market situation right now where I think the US equity markets compared with emerging markets, for example, trading at almost an historical high. So we are believing that there's going to be a reversion to the mean, a normalization of those premiums over time. And that's why we feel the outlook for international investments is really so much better now compared with US market, that it's a perfect time to take profits on US investments and use some of those funds that are still held in reasonably strong dollar to invest internationally into cheaper currencies and cheaper valued investments. So that we feel is just a once in 2 decades opportunity, really.